We were not carrying massive D&O or the professional liabilities, and the reinsurance was not even available to that extent. So we may not be able to get D&O cover for a limit beyond rupees 50 million. I floated an inquiry to test the market in London, and the inquiry is placed there for about cover of $5 million, and the rates have not yet come in. So it's just I was testing the market. So people are not really quoting on the D&O cover at this stage. But we have an issue of terrorism, which is a major issue. And the capacity for terrorism is also going to shrink, because AIG was the leader in the terrorism insurance also world over. And we had a major issue in December when the riots took place in Karachi and in Sindh, and the loss was pretty heavy. Though Munich Re and Swiss Re, with the 72 hours clause which was there, these were converted, or these were filed into the riot, strike and damage cover, not in the terrorism. So some of the insurance companies were able to get claims from that. But those reinsurances luckily were placed before 27th of December for the following year, means 2008. So 2008 rate hike has not yet taken place. But now 2009 reinsurance is going to be difficult on account of terrorism. And the new wording has already come in from some of the underwriters, which has got tougher exclusions. So if you are going to audit these, your clients or even insurance companies, you need to really ask about those exclusions, and also the quality of the reinsurance which is going to come in, and the level of deductibles that are going to come in. The solution that I have talked to my friends in the insurance industry is that there is a need to create a pool. When the crisis like this happens, in most of the countries, the local insurance companies get together and they form a pool, which sometimes you call it a reinsurance pool or a fire pool, or in New York in 1980s, none of the insurance companies were prepared to insure the old buildings. So there was a pool created by the New York Insurance Division, and everyone had to subscribe. So most of these insurance companies will have to join in the pool and create a capacity. And then government of Pakistan collects 1% of the federal insurance fee. There is a good case, I'm sure the chairman of the IAP was here, I saw him, that there's a case that you need to go and ask the government to dish out some money. Basically, this fee was introduced to pay for the insurance education and also for the fire fighting arrangements at the local municipalities. But the money has gone into the national exchequer, so this money needs to come back, and perhaps it can help to set up this pool, because if you know that the Marriott was insured for a terrorism cover to the extent of 50 million rupees only. And though the cover was offered to them, I've been told, but they did not take it because the price was too high. But then the cost is going to be exorbitant as far as the terrorism is concerned. And the effects, obviously, of this crisis is going to be the capacity and the rates, but I don't see that is going to be bad. But then our underwriters need to also very carefully see that one or two companies have suffered very badly in 2007 riots losses, and you know that these were massive riot losses. So that's a big issue. But then we need to also see that two of the government-owned, one partly owned government entity, Pakistan Insurance Corporation, which needs to strengthen its capacity and to professionalize, and the National Insurance Corporation needs to come into the pool also. So I'm going to get into my third part of my presentation, and that's going to be, Mr. Shah, just going to be about 6 to 7 minutes, and then I'll hand over to you. So this is something which I wrote. My daughter in Canada is studying there. She helped me in giving me some clues for this, and the young boy at my organization gave me some pictures for this story. Sorry. I need to go. Okay. This is Michael standing with his girlfriend, 8-year-old, in an IT engineer. And this is a true story, by the way. Some pictures are there. I'm going to email him and find out for you. He sees that his friends are getting into big houses, so he says, I also want to live in a mansion. And he's making $45,000, but he wants to get into a $450,000 mansion. And he thinks that he can get it. But his record is pretty poor with regards to decision-making abilities. And what he does, at the age of 22, he was delivering pizzas. But then he had leased a car, BMW. And within very short span, he defaulted. His credit score is very poor. And yet he goes to the mortgage brokerage houses, and he presents $4,700 worth of saving. And he goes to Michael at One Stop Mortgage Shop with Jimmy. He meets him and he says that, look, I'm interested in this. This is bothering me. So this Michael chap told him that, look, I'm sorry, I can't get you 30 years fixed rate. And by the way, 30-year fixed rates are for old people. When they die, insurance company is going to pay for it. You are young, and 30 years rate is 5.7%. I can give you an adjustable one at 3%. And let me tell you, I will give you at 4,500 deposits only. So he said, okay, that's fine. Where do I sign? And most of people, they just are keen to sign without looking at the documents. So he signs up, and this chap, Michael, is not worried because he's getting a hefty commission. He calls his pal at the First Regional Bank of Georgia, and he says, I've got another one for you. And they are all into this business. And he says, look, Jimmy, these subprime are for people like Michael. And sign him up. I will give you the money tomorrow, by the close of the day. And this business was going on and on. And then Lehman Brothers into buying these securities. And this girl calls Michael, Bill. And she says that, look, do you have any bonds for me? I'm eager to buy because I have investors all around the world. And I will take this up. And she gets these bonds, and the investors are sitting in Hong Kong, eager to invest, because they were not really happy with 1.5% rate that they were getting. And with this kind of securities, they were getting quite a good. And then 3 years after that, obviously the housing, as Dr. Saw also said, that housing boom was going on, and people were eager to build all these houses. And in Georgia, next to Michael's area, there was a huge block built up into that area. And Michael was worried because his rates went up, the adjustable rate, and he could not cope up with the monthly payment. He calls the broker. He said that you told me that you are going to refinance. But he says, look, you are a bad risk. And things have gone bad also because more development have taken place. And sorry, I can't help you. This is one of the investors, and many of them, like, Harry, this chap calls Lehman Brothers and said that, look, I've got my quarterly investment report, and I've lost $135 million in just one quarter. What's going up? You told me that these were insured, and they were safe investment, and they were AAA rated. So what do I do? He says, don't worry, the market will come back, but let me call AIG. And you don't worry, I'll take care of it. But he says that I'm going to pull out the money, and he pulled out the money from Lehman. Lehman calls AIG, and this chap at the AIG said that, look, you are the millionth person who called today. We have too many people calling. We never knew that you all are going to call us in one go. And here the Goldman Sachs has called me just now asking for $1 billion. So everyone has started bailing on Lehman or some others, and obviously the payout could not be cope up. Now the commercial bank, Dr. Saab said that they got involved into this also, into this lending. And Citibank perhaps was the first one which we could read on internet. So Lehman called Citibank, but then Citibank chap says that, look, sorry, we were into the business. We, in fact, pioneered this business, and we did the FIFO, first in, first out. So sorry, we don't have the money. And by the way, your status is junk bond, so we can't give you, and Arab investors have invested and given us the money, and we are not supposed to do that. So Lehman goes bankrupt. Two of the guys made good commissions. They are enjoying. Michael is having a foreclosure of his house and is at his mother's place eating pizzas. AIG could not pay the claim. The Fed, the government realized that this crisis is going to blow up into the all-around depressions. So there was a $700 billion bailout package. Who is to blame? The blame is so large that it encompasses everyone, not just greedy Wall Street fat cats, as we are all hearing. The Federal Reserve for keeping interest rates unnaturally low. The public, which we call it here also in stock markets, greed, going on badlas and overstretching. The mortgage industry, realizing that this guy is a bad risk. Wall Street, getting into the mortgage business, these investment banks. Investors, for higher returns, not looking at the wordings of the bonds. Insurers, as I said earlier, blind underwriting. They couldn't pay, and they created huge portfolio. I'm sorry to say here also, auditors for certifying the accounts of banks and insurers without going deep into the quality of credit risks and claim reserves. In the case of AIG particularly, now that the auditors is saying that we did not have the information, but they could have qualified the report. Credit agencies. Finally, regulators, which in the case of insurance I explained, but even in investment bank and other areas. So, Dr. Saab mentioned about the investment by the big countries into the AAA rating securities. And though I have worked in insurance, Karachi Stock Exchange, so people know me from, and one of the friend, he presented this book to me just only about 2 days ago. And he says, the 100 best stocks to own in America. 4th edition, 100,000 copies. And he says, look, year before last, this book was being sold at $29.95. But I picked it up for you at 50 cents at the doorstep of Walls, Barnes and Nobles. So he presented this to me. So now, yes, AIG is here. AIG is here. Top 100 companies are here. What Americans say, finally. If you had purchased $1,000 worth of AIG stocks a year ago, you would have $14. Because AIG stocks, that peaked from $85 to intraday trading of $1.25, $1.25. And the average running currently at $2. So, but if you had purchased $1,000 worth of beer 1 year ago, drank all over, and yet turned in the cans for the recycle, you would have got $21. So, the advice that people are getting is drink heavily and recycle. Thank you very much.
for giving us the final advice. So, okay, Nadeem, I think we can now open it for further question answers session. So, floor is again open. If there are any questions.
First two slides. Hello, in your slide you said there are housing stock of 22 trillion. My first question to you is...
2 trillions. Housing stock.
Housing stock was 20 trillion. What I'm asking you that was the worth of housing the same, or there was some creative accounting in between? You know what I'm asking you, that you have taken out the credit default swap in this whole story and the things. But I personally believe that firstly there were collateralized debt obligations, and then those debt obligations were secured by credit default swaps of 444 billion rupees, what you're saying. But what I'm saying, what I'm trying to say, whether the stocks or the balance sheets were ballooned up by having these things in the balance sheets. Am I able to put the question correctly, I think? Have you understood the question?
Given the size of this, and we talk of $20 trillion of the whole housing, and the 2 trillions for just subprime, the filings by the insurance, I know that the credit swap that we are talking about mainly, the filing for AIG or for number of other insurers is quite large, even ranging, I mean, some estimates are to the extent of $3 trillion for the credit swaps. And maybe if the ballooning effect was there to some extent, but still the quantum was quite high.
But this is notional value. Net exposure has not been estimated. This is what
That's true. Net exposure, nobody has been able to, and there's a, every day people are talking that the exposures, this is the notional exposures, and the value has not yet been estimated.
But Shakur, just to respond to this, I mean, the value of total derivatives outstanding, which includes credit default swaps and many other type of derivatives, is estimated to be $600 trillion. 600, as against the total US GDP of $14 trillion. The value of derivatives is $600 trillion.
Second question, which will be not for you, for Asad. Basically, he's the custodian of accounting standards in Pakistan. That
I think you can hold it. I have a presentation on this.
So that will ask after his presentation.
Okay. I just would like to know that the reinsurance arrangements made by AIG, normally the insurance companies would place, they will keep on their books. There's a market practice, and there may even be some regulatory requirements that they do not hold the underwriting, the entire underwriting on their own books. And what was the policy being followed? Is there any sort of requirement in the US on that?
On the credit insurance side of in 18 subsidiaries, they never thought that this is going to happen like this. And there was spreading all over this risk, but yet when they wrote this business at such cheap rates, they could not reinsure. And they kept this on their net account. But to tell you also, AIG unfortunately was getting bigger and bigger, and the group did not have control on the subsidiaries because they were acting and writing on their own books. And where they reinsured, even within the group, as Transatlantic Re, the exposure within the group was very high, which was not the case with the Munich Re or Swiss Re when they write. Even in reinsurance, when they write, they retrocede.
Yes, that's right.
You know, and there are specialized companies which write a specialized business. Whereas AIG, not only in credit insurance, in aviation, for example, AIG when last year wrote PIA, it gave a low rate whereby it could only, the slip was short by about 20%, and nobody was willing to buy this. So the rate at 20% was placed at the higher rate, and AIG had to retain that business on its net account. So the exposure was pretty high.
Second, just to add on, when we look at the AIG, I think the insurance business has not gone bad. Their derivative credit default swap business has gone bad. What I'm asking you, when we used to read the basic insurance, there is a difference between insurance and waging contract. So do you think is it that mixture which has gone wrong? Because you are actually engaged in the waging business rather than insurance business.
Yeah, well, AIG got into the several businesses, if you look at the report of AIG. And credit swap, obviously, they're badly hit. But in other areas, other liability business or aviation businesses, they were making money. And some of the businesses which they are trying to sell and people are eager to buy, they're profitable businesses. But then the exposure and the reserves that they have are not adequate enough to support their underwriting.
I also, using my prerogative as president, ask you a question, sir, on this. And I think this is an observation also which perhaps may, respond to your answer, Shabbar. I think one major issue with the insurance industry, and I think this banking crisis perhaps has arisen primarily because of inadequate regulation and regulatory framework in insurance rather than banking, because bankers were actually transferring risks as part of the risk management to AIG and other insurance companies who were insuring these credit instruments. And, in Pakistan at least I've seen, and perhaps it's the same, I don't know, please throw some light on this. Insurances are the entities who take risk. They are the they are in the business of risk taking. And when they underwrite and provide assurance or coverage, they take risk. They don't even disclose in the accounts what is the total coverage of the risk, the underwriting amount. And there is no, as far as I know, relevance of adequacy of capital. I mean, for instance, in banking, both the on-balance sheet and off-balance sheet assets that the banks have, or the exposures they have, the central banks have require them to have 8% or certain amount of capital, capital adequacy ratio. But the insurance, which is actually the risk business, there is no relationship of having a certain amount of capital in relation to the total outstanding insurance. So I think that is an issue, as Dr. Saab pointed out, that whereas banking itself was regulated, but the other financial sectors like insurance and hedge funds and investment banks, were not that much regulated, and banks were actually transferring their risks to all these entities, assuming that they were all sound. And actually, had the AIG gone down, the banking sector would have gone down even further. So, would you like to?
And one is the solvency ratio. And secondly, the retention capacity of the insurance company is determined partly by the reinsurers. They're looking at various factors. I mean, this is the
They don't
normal.
even disclose what is the total amount of risk.
That is right.
There is no disclosure, and there is no relationship of the capital. How much capital you should have based on the exposure that you have.
But the solvency ratio would take into account
But what is in the balance sheet? What Asad is saying, you are in the balance sheet, you have a ratio of that thing. But your balance sheet mein nahi hai, uska nahi hai. That may. Sir, but what I am reiterating, what I am saying, the gambling and waging need to be distinguished from insurance. That's what I am saying. That is what Western press is writing.
Well, that's what I said, that insurer has to be prudent and has to look at the reserves, and based on the reserves, they need to write the business. To return to Mr. Shah's comments and followed by your observations. When we migrated from 1938 Insurance Act to the Insurance Ordinance 2000, it was envisaged that we will have Pakistan Insurance Regulatory Authority, and the money was allocated for that. But that did not take place. The insurance regulatory idea was shelved, and the business was given to SEC. Now, SEC till date, unfortunately, has not been able to pay any attention to insurance. I'm sorry to say. There's no commissioner in insurance for the last 3 years. There's no executive director in the SEC for the last 2 years. So that's where we are, professionals need to demand that, and there is a need to create that regulatory authority, and there is need to monitor and go for the disclosure of these facts, basically. Yeah.
So I think if we have exhausted all of this, so I will not.
Can I raise a point here? Mr. Fudda mentioned that who to blame. You ignored American Congress, Senate, and the politicians who were the first ones to change the political systems of risk management and other things.
Thank you.
Bismillahir-Rahmanir-Rahim. First of all, I would like to express my gratitude to Dr. Ishrat Saab for his very elaborate presentation on the global financial meltdown. Dr. Ishrat has been very, I think he has been a friend of the Institute of Chartered Accountants of Pakistan. When he was governor of the State Bank, he was, I think, one of the most frequent visitor any governor of the central bank has been. Whenever we invited him, he was very kind enough, and he attended our council meetings, addressed our council more than once, and he was the chief guest at our SAFA conferences and many of the conferences. So I'm thankful to him to have come to this seminar, because as you know, we have initiated with this seminar, this is the first in a series of seminars on not only the global financial meltdown, but the national economic crisis or macroeconomic crisis that we are undergoing. So we hope to have more of these seminars, and in this process, the idea is to understand these crises as professionals, as accountants, so as we are able to respond to these challenges within our profession. And also, one of the objectives is that the recommendations and the issues that are raised and the recommendations and the solutions that we identify, we hope to then send those solutions or recommendations to the government and to the decision makers. I will not take much of time. I'm also, of course, grateful to our friend Muin Fida. Muin Fida, again, we are partnering with Mr. Muin Fida with his SAIP in a number of initiatives, and one of them is, as you may be aware, that Institute and SAIP, together with the Pakistan Institute of Corporate Governance, have developed a guide, a soft guide for family-owned enterprises on corporate governance. So there, I think the main pillar of that work was Mr. Muin Fida, and I think today we heard a very interesting presentation, again, especially highlighting the issues in the insurance industry and his former organization, AIG. I don't know whether we have to blame AIG or the people who worked in AIG as well, but I'm sure he didn't have any part in this whole process. So I will not take more of your time. I would just, this is a 50 slide presentation. I'm not going to go through the whole thing. but I will just go to one slide to respond to Shabar's question on the issue of accounting, because after all, you know, these initial slides are all what has already been talked about. So how do we deal with the crisis? These are some issues here. But key messages as far as the profession is concerned: the current financial crisis is not an accounting issue. This is the first and the most important one that I wanted to say. And this is, the 5 big firms have come out with this. And, you know, the important thing is that, and this is not a new crisis now. The crisis started, as was pointed out by Dr. Ishrat, in August 2007. And obviously now we are seeing meltdown and the rescue packages and the bailouts. But so far as the accounting framework is concerned, some people have raised doubts about the fair value accounting. The accounting firms have come up, and the regulators also agree that issue is not that whether or not there should be fair value accounting. Actually, fair value accounting has highlighted the issue on a timely basis. So response is actually that mark to market and the fair value accounting, we need to make it more reliable. There should be more of it, not less. Playing with the accounting standards, such as suspending fair value, would not restore investor confidence in financial reporting or restore confidence to the capital markets. On the contrary, of course, we need to further enhance and understand fair value, because fair value is a complex issue and we need to make it more reliable. Statutory capital requirements are compelling a number of institutions to raise capital or reduce lending activities to reserve capital, contributing to the lack of liquidity. Of course, we are seeing liquidity crisis. Continued write-downs of financial assets over time are reflective of the continued changes in the asset values and in market conditions over time. And for us, of course, going concern determinations would be a significant issue. And there are a number of other issues, of course. The key issue for the audit in the audit of the financial statements of December 31 of many of the banks, insurance companies, would be the issue of how reliable is the fair value and the impairment testing. You know, those are the risks. I think we'll have perhaps another seminar to address the risks for the auditors and accountants. But so far as AIG auditors were concerned, Moin Saab, that issue has been going on. It's not a fair value issue. That has been going on, as you showed, since 2005 with the PricewaterhouseCoopers, and I think the number of investigations that have already taken place. So with these words, I'll not take more of your time, and I'm extremely grateful to the organizing committee or regional committee for arranging this seminar and for providing us such brilliant speakers. And I'm also grateful to all of you, ladies and gentlemen, for participating in the seminars in very large numbers. And we hope to continue this series, inshallah. Thank you very much.
Before I invite our we have a small presentation of a small ceremony of mementos presentation. Could I request Mr. Asad Ali Shah to come forward and present the mementos to our speakers this evening? Could I request Mr. Ishrat Hussain to come forward and receive the memento from our... Right, could I now request Mr. Moin Fadal to come forward and receive his memento from Asad? Right, yeah. Could I request our Chairman Asasi, Syed Najmul Hassan, to present the memento to our session chairman, Mr. Asad Ali Shah. He's been sitting there looking pretty. Right. Okay, with that, as far as the presentations are concerned, we'll upload Moin Fadal's presentation on our website. As Asad already mentioned, that we've started a series of seminars, and we hope to bring one more seminar following in this series very soon. As you just announced that we'll bring us another session on the banking risks, especially related to December 2008 audits. With that, ladies and gentlemen, thank you very much for attending this evening seminar. And with that, I'd now like to invite you all to join us for dinner. Thank you very much.